Let's get back to Natalia Gurushina from VanEck. Natalia, rising India, we've got the bond inclusion to look forward to, we've got elections to get through, there is ratings upgrade potential as well. Is it all in the price?
Well, India is one of EM's rising stars, as you quite rightly pointed out, and I think its story is absolutely fascinating. EM observers love India not only because of India's equities performed so well in the past 2 or 3 years and are on the verge of overtaking China in the MCI EM index. What is important about India is that India proves that structural reforms can bring results in 2 or 3 years rather than 2 or 3 decades. And I'm talking about not just the market, but the economy and the people. In 3 areas where India's structural progress was especially impressive are taxes, digitization, and formalization of the economy. Now, so far, India has been an amazing story for equities, right? Reforms, growth. The question is whether the same will be the case for the bond market. This is a big question for 2024 because India, as you said, will be included in the GBIM local bond index, and I'm sure there will be sizable initial inflows because it's a novelty factor. Plus, passive investors will have to follow the index, and the weight in the index will be quite big, around 10%. But the question is whether fixed income investors in India bonds can live happily ever after. The Indian government is heavily indebted, and it's been running large fiscal deficits for quite some time. And unlike equity investors, fixed income investors tend to pay more attention to factors like this. On the bright side, India's latest budget looked, I think, more encouraging than initially expected. So I think it's going to be a very exciting ride.
Hey, Natalia, we were talking offline a couple of seconds ago in the break about Indonesia. What do you make of their paper? It looks pretty good. Triple B, 6.25 on the benchmark at 10. But are there risks to the upside in your mind because of what the new president may want to do?
Mm-hmm. Well, I think Indonesia's most important lesson, especially in the fixed income area, is that the adoption of Orthodox policies, I'm talking about fiscal consolidation and a more transparent currency mechanism, can be a big boon for local markets. Indonesia's government bonds have been the darling of emerging markets, outperforming the index after the pandemic and delivering small outperformance last year. And this is the key reason why there is so much emphasis on policy continuity after the presidential elections. I think the first results are encouraging. There was only one round, which significantly reduces the period of political uncertainty, political risk premium, and it also tells us that President-elect has got a fairly strong policy mandate, which I think is very important. Now, the focus is shifting to the formation of the cabinet and the policy agenda, especially fiscal stance, right? This year's budget is probably safe, but President-elect Prabowo is known for his pro-growth bias, and this does raise some legitimate issues about the medium-term fiscal outlook. But you know what? In the meantime, I think elections opened room for policy rate cuts this year without putting undue pressure on